Okay, hi everyone, it's Jeffet again, all right, from Rubik's Academy. It's the second episode in our live stock analysis series. So in this series, I'll be doing some technical analysis on chosen shares and stocks. All right, now please note that all this analysis is purely technical in nature. It is not fundamental. If you want the fundamental analysis, you have to sign up for our research report. Okay, now without further ado, let's get right into it. Okay, so today's first stock I'm going to analyze is this stock. It is American stock by Darden Restaurants Incorporated. Okay, so its current share price is trading about $70.62. All right, it's trading on NYSE, if I'm not wrong. Okay, so now the few things that I want to highlight here. All right, the few things that I want to highlight here. All right, this is Darden Restaurants. Okay, it's trading on NYSE at about $70.62. Okay, so a few things I want to highlight. Number one is this is the RSI. As you can see in the blue box, it has recently bounced out of the oversold zone, which means this sharp rebound, this V-shaped rebound could mean that the stock is now going from oversold region into overbought. And this is, most importantly, this happened on the all-time chart. Okay, you can see that this particular bounce occurred on the all-time chart. Okay, that's important. Whenever I look at RSI, I always want to go straight to the all-time chart so that I get the clearest view of what is happening in terms of a macro view of buyer strength against seller strength. All right, I only use the RSI when it comes to all-time chart. The RSI is best applied to a macro time frame rather than a micro time frame. All right, the other indicator which is very best applied to a macro time frame, okay, macro time frame, is the ADX. As you can see, the ADX is also picking up strength. Please note that the ADX does not indicate bearishness or bullishness. It is simply for indicating trend strength. Okay, so you can see that it's also picking up. All right, anything that is going up means the strength of the trend is picking up. It is increasing. If it's going down, means the strength of the trend is getting lower. The trend could be dying. All right, so with that being said, let's take a look at the charts at the 3 months time frame. Okay, so you use the macro time frame to decide whether you're going to go in for a bull or bear stance, whether you're going to go in for a long or a short. But you use the micro time frame, a 3 months time frame, to know which position to enter and whether it's time to enter and where do you put the stop loss. Okay, so you can see right now, let me just try and draw this particular, okay. So you can see from here that I've drawn a okay looking trend line. All right, it's a pretty nice trend line, and the price is resting on the trend line itself. Now, there's one thing that I want to tell all our audiences. A trend line is never as good as a solid support or resistance level. A support or resistance level is a horizontal price level, but a trend line is a slanting price level. All right, a slanting price level is never as good as a horizontal one. Why? Because the market is a self-fulfilling prophecy. The more people that believe in it, the more it will move in a direction. And therefore, the easier it is to spot a certain technical pattern, the easier and the more people that will subscribe to that pattern. Okay, so horizontal price levels are always easier to spot than trend lines. That's why if you observe for my indicators, I don't use custom values. I use default values because most people, most investors, most traders, they are using default values. All right, I mean, you can customize your own value to your own trading style. For me, it's more a matter of style than accuracy. If you have your own custom value, it just means that you work better with that custom value. It doesn't mean that your value is a secret sauce and therefore your value is a better value than my value. There's no such thing. All right. When I say value, I'm referring to all the indicators. So you can see that for every indicator, there are different values. All right. Okay. These are settings. If you want to change the value, input. So this is the value I'm talking about. Every single one of these indicators is built on a certain value. All right, you can change the value here. All right, you can change. Okay, this is of course for those of you who are not adept at trading. Now, let's say I want to go in for a long or dividend here because the RSI and the ADX says that the trend is picking up, is in the oversold zone. Therefore, I want to go in for a long. Let's say I want to go in for a long. Okay, what would I do? I would actually be looking to go in here. This is the area that I'll be looking in, which is now. Okay, just now. This is the area that I'll be looking to go in. Okay, so you can enter now if you want to go in for a long. Where should you set your stop loss at? Your stop loss zone will be somewhere around here. Okay, the red color area indicates your stop loss zone. All right, then where would you take profit? Your take profit will be somewhere around here to the previous resistance. Okay, so you can see from the picture, the green box is much bigger than the red box. All right, so at least the risk to reward is rational. It makes sense. Okay, so this is for dividend. All right, so you can enter in the blue area, which is between the price of 68 to 65 USD per share. Your stop loss should be somewhere between 64 to around $60. Your take profit zone will be around $80 plus. All right, 80, maybe probably 78 and above. Okay, that's where your take profit should be. All right, that's where you'll see at least a reasonable risk to reward. All right, the green box is your profit margin. The blue box is your entry region. The red box is your loss margin. All right, this is my style of illustrating risk to reward ratio, which is very important for any investment or trading consideration. All right, even for your daily business considerations, risk to reward is very important. Every decision you make, you need to understand what is the risk, what is the reward, how are you going to get a risk, how are you going to get a reward. All right, for a chart, it's easy. You can just plot it like that. Other decisions, not that straightforward. Now, the other instrument that I want to go through today is also shares. The next financial instrument I want to talk about is also shares trading, but it's not dividend anymore, of course. It will be a company that we are all very familiar with, all right, called American Express. Okay, so American Express is currently trading at $86. If you look at the overall time chart, the RSI is not in the overbought nor in the oversold zone. ADX is relatively flat. Okay, it's flat. All right, if you plot a line for the ADX, it looks exactly like what's happening in the charts. Okay, it is forming what we call a symmetrical triangle formation. When we see a symmetrical triangle formation, it means that price is consolidating. Okay, what does that mean? It means that both the bulls and the bears, both sides of both investors on both sides, they are waiting for either a major announcement or they are waiting to take direction from the facts. They are waiting to take direction from the economic calendar, economic data. They are waiting for something to happen to give them a reason to go long or to go short. Now, but why am I still highlighting this particular share to you right now, even though the market is waiting to go long or go short? Because you need to be there before the market starts moving. All right, that is always the golden rule. Now, so that's on an all-time chart. Let's go to the 3-month time chart. All right, so you can see on the 3-month time chart, you can see this shape again, which is again, it is consolidating. But of course, on the 3-month time chart, the lines look a bit different for the ADX. Okay, so let me delete this so as not to confuse you. And also on the 3-month time chart, the RSI is neither in overbought nor oversold zone. Okay, now doesn't matter. Okay, so you look at this chart, it's forming what we call a symmetrical triangle. Okay, how do you trade this formation? How are you going to look for opportunity with this formation? Now, number one, you wait for a solid breakout. All right, you wait for a solid breakout either towards the bottom or towards the ceiling. So you wait for a solid breakout either here, okay, or here. Okay, you need to wait for this pattern to be broken because this is a consolidation pattern, and this pattern doesn't point to either bear or bull. It's not an ascending triangle whereby it points to more bullish influence. It's not a descending triangle whereby it points to a more bearish influence. Okay, for a symmetrical triangle, like the word symmetrical, it means both the bulls and the bears do not know what to do. Okay, so you have to wait for the breakout. You cannot try and estimate whether you will go up or down because this formation doesn't give you a clue. All right, so once it breaks out, what are you going to look for? Once it breaks out, what you want to look for is retracement. So for example, if it breaks out maybe to this price level, let's say it goes all the way to, let's say it goes all the way here, all right, to $115, which is the previous resistance. Okay, I didn't rehearse this, I just put a line there because by experience it should go there. All right, so as you can see, this line coincides with the previous resistance points. Now let's say we just $116, it's going to come down. All right, but please do not try and short at $116 because you always want to trade with the trend. The trend is your friend, right? The trend is your friend, so don't try to short. What you want to do is, since it has broken out a symmetrical triangle, all right, you want to look for a retracement. You want to look for a retracement that comes back down, all right? And the way you determine this retracement is by using this tool called the Fibonacci retracement. So let's say the price has gone here, all right? So you want to look for a retracement, all right? A retracement to where? Maybe a retracement to around the 50 or the 61.8 level. All right, then you can enter there. You can enter around here, this level, this big blue rectangular box that I've just drawn. Okay, let me put in a different color just to make sure that you guys get what I'm saying. Is this a better color? No, not really. Let me try another color. Let's try white. I think white would be good. Okay, so you can see the white box is where you look to enter, all right, which is around here. Okay, so that is the range of price you look to enter. Okay, has close to the previous resistance trend line. That means this orange line, as close to this orange line as possible. That's the best. Okay, then you will put your stop loss around here. This will be your stop loss. Okay, the red box is your stop loss, your loss margin, your potential loss margin. Okay, your potential loss margin. All right, and then where is your potential profit margin? Your potential profit margin will be somewhere around here. Will be going right back to the, the potential profit margin will be going right back to the resistance. Okay, so you can see again, all right, the green box is a lot bigger than the red box. This is how you want all your trades to look like. You want your trades to look like that, whereby you have a lot more profit margin than loss margin. If you can do a 1:2 risk to reward every single time, every 2 trades you win. That means every 2 trades that you profit from, you can afford to lose 4 trades to cover that up, to give back your earnings back to the market. Okay, so that tilts the scales in your favor. Of course, I will be going more in depth into this risk to reward in the course itself, but this is an example of how I do it. Okay. All right, so today we went through American Express, we went through Darden Restaurants Incorporated. So I want you guys to rewatch this video if you need to. It's a 15 minutes video. All right. Looks like the analysis videos are taking longer than I thought. I thought it would be fast. Apparently not. Maybe I need to cut it down to just one instrument. I'm not sure. All right. But in any case, please look at these videos and understand what the strategy is. All right. Really try to understand where the strategy is. And number two is, I just want to say that whatever I said is not investment advice. It is not a solicitation to trade nor invest. Whatever actions you take after you watch my video belongs to you, and all associated consequences belongs to you as well. All right. I have to say that it's a financial disclaimer. All right. So thank you very much. I look forward to seeing you guys in the next video. Thank you.